This is the overnight swing trading series you've been waiting for. Welcome, my name is Rosh, the founder of SpyTomorrow.com, and this video series may just convince you that overnight swing trading is the only way you want to trade in 2026. Overnight swing trading is high risk, high reward trading, like day trading, except there's only one trade. And we're taking advantage of what we refer to as the overnight gap. You've seen the overnight gap. The market closes at one point at the end of the trading day and opens either up or down the next morning. Well, that's tradable. And we have different approaches to taking advantage of the overnight gap. Sometimes there's a big gap and a lot of money can be made during those big gaps. And other times there's not much of a gap. And so we need to know when to be careful and maybe not to risk as much. It's about knowing when to be highly aggressive and when to be conservative, when to trade and when to put in your maximum percentage, whatever it may be. We're going to talk about what is that percentage. We're going to talk about your risk tolerance. We're going to talk about different ways to trade that overnight gap using signals that are free for you or more advanced signals, say, over at SpyTomorrow.com. I mentioned SpyTomorrow, of course, because I've spent years building it and I depend on it for my overnight swing trading. But you don't need to use SpyTomorrow. There are many different signals out there, but the thing is, you need a signal because we buy at the end of the trading day and we sell in the morning. Well, we need to know whether the pressure is up or down. In other words, an indicator that'll help us determine what is the probability that the market will open up or the market will open down, so we know whether to buy, say, ETFs that are pointing up, such as the TQQQ, or perhaps the SQQQ if we think the market's headed down. Or perhaps if you like using options like I do, you can buy calls or puts. I do offer a free up or down signal on the front page of SpyTomorrow.com. It's available at 4 o'clock Eastern Time after the market closes. And for most of you, you have a good 15 minutes after the market closes to buy your options or ETF overnight. Now, if you don't want to use SPY, there are other things you can do, such as consider the put to call ratios, or maybe the MACD or the RSI. Maybe you can kind of look at how the market's trending at the end of the trading day. One thing you should do, though, no matter what it is, don't jump around from signal to signal. Find signals or a combination of signals that work for you and be consistent. It doesn't mean you don't make adjustments over time, but you need to be consistent with your trades, and when you make changes, it's a mindful change. So keep a log, keep notes of what's working and what's not, and what is giving you the highest percentage of correctness in your overnight swing trade. The number one thing that derails traders, no matter the style of trading, is emotion. And that's why I like overnight swing trading, because it's much harder to get into my own way. Like during day trading, where I can second guess myself or just take emotional risks. And with overnight swing trading, it's just that one trade at the end of the trading day. Of course, I have to sell the next morning, but I can set up, say, times in which I want to automatically sell or set a stop loss for after the market opens. There are a number of different ways you can go about it that can help to even minimize that emotion even more. So you need to look at it like this. If you knew there was a high probability, say, the market was going to open up, what would you do? And if you knew the market was going to open down, what would you do? If you knew that the market may have a big move up or big move down the next day, what would you do? If the market did the opposite of what you were expecting, what would you do? And there are different ways to approach this. One way certainly is your position sizing, being very focused on the size of the position based on your confidence. And they should be smaller position sizes because there are going to be days in which you are wrong or your signal is wrong. See, we're dealing with overnight. And overnight, many different things could happen. Around the world, the markets continue overnight Even though the US market closes, markets do continue, and say wars could break out, there could be earnings reports after the bell, there could be government reports the next morning, and you need to be aware of those. You need to pay attention to global and local economics that could affect and change the mood of the market. So there are ways to protect yourself, but one of those ways is certainly by your position size. When you don't have a lot of confidence, maybe don't trade. If you have a little confidence and a good sense of the direction, maybe a partial trade. And when all your signals are pointing the right direction, well, consider your maximum trade, whatever that percentage may be. Based on my experience, the best traders tend to trade maybe 1 to 2% of their portfolio. So if you have a $10,000 portfolio, you may want to consider, say, $100 to $200 trades overnight. If you have more, you can consider more. Now, sometimes when you have a smaller portfolio size, let's say $1,000 or $2, you may want to go a little bit higher, but you're in a higher risk situation. Maybe you go 5 or 10%, but you have to remember, if you have a number of losing days, which you will, you need to be able to survive those losing days. There are some things we can do to protect ourselves, especially in what we refer to as negative gamma markets. One thing we really like to consider are ratio trades, and there are a number of ways to trade options specifically. There's some very complex techniques that quite often we really don't get into. We try to keep it simple. A directional trade, maybe a small call or small put, or a ratio trade. So for example, if our indicator said up, we might buy a 2 to 1, 3 to 1, 4 to 1 options ratio, meaning we might buy 2 calls to 1 put. There are a number of ways to go about this, and I'll certainly dive into it in the future videos that are a part of this series. Options trading can get rather complex, but one thing we generally don't do is recommend trades that could lead you into a situation where you could lose more money than you put in. That's why if you just buy a call at the end of the trading day and sell it in the morning with maybe a day to expiration, maybe 2, 3, 4 days out, maybe 1 day to expiration if you're very aggressive, well, you can do that, but you're not going to lose more than you put in. So if you buy a $50 call and the market changes overnight, the most you're going to lose is $50. That's the way I like to approach it. But the nice thing about that, if the market moves up big, well, then you can make 25, 50, 100 or more percent. It all depends on when you exit. So you're still in control of that part of the trade. Can you continue to still day trade? Of course you can. I am in awe of great day traders. Day trading is tough. The emotions, you need to be able to keep yourself in check, and you have to have a system, and you need to be consistent with that system. And you can't let emotions take over. And again, that's why I like overnight swing trading, because there's nothing I can do about it until the next morning. Here are some very common questions I get about overnight swing trading, and I'll give you the best practices answers to get you started. First of all, when should you buy? Well, it's not as important when you buy as when you sell. However, I generally like to wait to the very last seconds of the trading day, which leads me to the question, when do you sell? And generally, we try to sell within the first half hour of the trading day. Our signals are designed to measure the pressure at the end of the trading day, which we feel carries over into the morning, but not much more than the first half hour. After the first half hour, we generally have a whole new set of pressure readings to consider. But if our goal is met within that first half hour, in other words, let's say our signal says up, but it starts off down, quite often it'll slowly work its way up. And if we can get there within the first half hour, we consider that a win, either to at least maybe minimize our losses or perhaps still continue on to make a profit in that trade. Again, it really does depend on your skill level, but there are a lot of opportunities in both the up and down side. Next question is, what is the best DTE, day till expiration, if you're trading options? And I've changed my tune back and forth over the years. I often had a sweet spot between 4 and 7 days, and I think that's a good spot for most people to start. Now, if you wish to be more conservative, you can go over 10 days. And if you're going over the weekend, 7 to 10 days is pretty good. I often do 1 day because it is very aggressive. And you get the most bang for your buck overnight like that. In other words, you'll make your greatest gains if you're right with your 1 DTE. However, if you're wrong, you'll probably instantly lose at least half of your money. So if you buy a call for $100 and the market opens flat or a little down, you're going to be down at least 50%, if not more. However, I've made the most gains that way, so I tend to stick to that method. But that is very aggressive in just my personal way of overnight swing trading. The next question is, do I have to buy options? And no, you don't. There are many different ways to trade overnight. You could buy or sell stock. You could buy ETFs, leveraged ETFs, for example, that are 2, 3, or 4 times leveraged, meaning if the market went up 1%, you would make 4%, but you would also lose 2, 3, 4 times as much if you were wrong. But these are things you need to consider and weigh out. For example, the TQQQ, I believe, is a 3 times leveraged ETF. And so if you thought the market was going to go up, you'd buy the TQQQ overnight. If you thought the market was going to go down or short the market, you'd buy the SQQQ. And the QQQ represents the NASDAQ 100. Another common question I get as it relates to SPY related to SPY tomorrow is, do I have to buy SPY? And of course not. You don't have to buy SPY. SPY is a good bellwether in terms of how the market as a whole may go because it represents a basket of, say, America's best 500 stocks. And quite often, as SPY goes, so does the market. But you can buy, say, stocks that are a big part of SPY, for example, or move in the same direction as SPY. So keeping an eye on, say, Apple, quite often Apple or Google or Tesla, these are highly weighted stocks within SPY, and quite often they move the same direction. Not always, though. So if you're going to not use SPY, make sure that that stock or an option often correlates to how the SPY moves if you're using the SPY signal. Now, I will say I often use QQQ and IWM for trading, even if I'm looking at the SPY signal. And QQQ and SPY have a lot of the big same weighted stocks at the top of them, so they do often move very similar. IWM is the Russell 2000, and that can often move completely the opposite, although it does often correlate with both SPY and QQQ. You just have to watch the market and pay attention. So the answer is no, you don't have to use SPY, but you might want to keep a close eye on other stocks to make sure they are in line with SPY before you use a SPY signal. I mentioned earlier that I really like ratio trades, but the thing is, we really can only use them in certain markets. I like 2-to-1, 3-to-1, 4-to-1 option ratio trades. So in other words, if our indicator says up, I might buy a 3-to-1 call option ratio, meaning 3 calls to 1 put. And there are variations of that, which I'll get into more in another video. But I can't do this all the time, especially in positive gamma markets. There's positive gamma and negative gamma. I mentioned this earlier. In a positive gamma market, the market generally is pushing upwards, but not with a lot of volatility. And the thing is with stocks, you need volatility. And in a negative gamma market, you have a lot more volatility. And so you can protect yourself, and that's really the right time to be protecting yourself in a negative gamma environment. In a positive gamma market, I'm generally looking at position sizes, as we talked about before. Maybe a quarter position size, half position size, full position size, based on my risk tolerance and how I feel about that overnight swing trade. But in a negative gamma market, where the market could just overnight totally switch the mood very easily. And if it does, it's going to swing solid the other direction, which means I could actually make money even if I'm wrong if I have a good position ratio trade. Not always. Quite often I look at it more as a way to minimize my losses, but sometimes the market does move enough that I can actually gain when the market mood changes from my signal. So how does all this work? Well, at the end of the trading day, I go to my dashboard. Now, you can go to your signal, you can go to the front page of SPY Tomorrow. This is what I'm looking at. I'm looking at the main signal, but I'm also looking at the gamma. I'm looking at the fear gauge. I'm looking at all these different signals. This dashboard I put together for me because these are the things I feel I need to know to make a good overnight swing trading decision. But quite honestly, all you really need to do is have a good up or down signal. And you can use any type of signal you want, but at the end of the trading day, you use that signal to decide if you're going to be pointing up or down. And you buy at the very end of the trading day, and then overnight, wait, and then the next morning at 9:30 Eastern, you'll decide if you're going to sell right then. Maybe you follow the market up or down a little bit. That's where some of your skill comes in. But if you're not really sure about that, if that's really getting too much into day trading, you might just want to automatically set your ETF stock or options to sell right at the market open, or maybe 15 minutes into the market open. Now, there are times where the market kind of matures, say at 10:30 or 11. Keep an eye on those trends because sometimes I'll automatically sell at, say, 10:45, where if I'm just following the ups and downs at the very open, I get a little shaky and I just let the market do its thing. But you have to watch for those trends because sometimes the market doesn't work the same way. It is common for the market to get into a cycle where it seems like it's doing the same thing every single day, such as maybe immediately start up and then fall down or vice versa. But that only lasts for a while. Take advantage of a trend like that while it's happening, but know eventually it is going to change. I tend to trade every day, but I have been doing that less and less. If my signals aren't really telling me what I want to know, and it just seems kind of muddy and really not clear, I'll not trade. And that is, I think, a sign of maturity over time. Because when you first get into overnight swing trading, you feel like, oh, I got to trade every single night. But you have to remember, the goal here is to grow your portfolio or maybe provide additional income. And so the goal is to make more money than we lose. And that comes from good management of your portfolio and your trades. And sometimes that means if you're unsure, you just don't trade. Your best bet is to learn the risks by paper trading to see how you would react with the overnight swing trades, how you might profit from the overnight swing trades or lose during overnight swing trades, and what is that emotional element and what would you do next. And sometimes, I think all the time, it's better to practice on paper before you use real money. Take a 30-day personal challenge. Try it for 30 days and see if it works for you. And then if it does, then you can start trading overnight with small amounts and see how you can build your portfolio using this style of trading. This is just one style of many, but I think it's a great kind of in between day trading and longer term swing trading. You can be active, you can be involved, but it doesn't take all of your time and you have the opportunity for great rewards because options overnight can have big moves. And personally, that's my style of trading. Over the next 7 videos, I'm going to break down many of the topics that we talked about in this video. The last video that bookends this series is the 30-day challenge. And the 6 in between are going to be about things like ratio trades, different types of trading, DTEs, and when's the best time to buy and sell, and about gamma regimes, and about the dashboards and how to read them. There's a lot of information. You can make overnight swing trading as easy or as complex as you wish. And you can use these signals for many different types of trading. We do have daytime pressure readings. You can look at it as a general gauge in terms of when it might be a good time to sell over a longer term swing trade, meaning should I sell tonight or tomorrow, depending on what the pressure readings are telling us. There are many different ways to approach the dashboards and the signals that are available to you in the marketplace. But this series is very much focused on overnight swing trading. And we're going to get into that. If you have questions, put them in the comments below. Of course, I'll see you in the next video.